Welcome to the Compounders Podcast, where we explore the anatomy of public company wealth creation stories. On this show, we invite you to be a fly on the wall for the actual conversations professional investors have with public company CEOs. I'm your host, Ben Claremont, a partner and portfolio manager at Cove Street Capital. In these conversations, I interview senior executives by posing the exact questions I ask as part of Cove Street's diligence process. Whether you are a professional investor, founder, or someone who is simply interested in business, we think this podcast has something for you. This season of Compounders, the Anatomy of a Multibagger, is sponsored by Tegas. Tegas is an innovative and disruptive company that is changing the way professional investors work. For more information, please visit their site at tegas.co.
All opinions expressed by your hosts and the podcast guests are solely their own opinion and do not reflect the opinion of Cove Street Capital or any affiliates. This podcast is for informational purposes only. It is not investment advice and should not be relied upon for any investment decisions. We are not recommending the purchase or sale of any securities. The hosts and guests may be beneficial owners of the securities discussed. You should not assume that the securities discussed are or will be profitable.
My guest on the show today is Jeff Rosica, the CEO of Avid Technology, a $1.2 billion market cap company that sells software and hardware for digital media production and management. For decades, Avid's products have been considered the gold standard in the entertainment industry. In fact, its Media Composer and Pro Tools products are used to make many of the movies you see and to create many of the songs you listen to. Jeff Rosica was Avid's chief sales officer and became the CEO in 2018. Since then, he has overseen the company's transition to a SaaS, or software as a service, business model. After a few fits and starts, the company has started to deliver on its margin and cash flow targets as the benefits of the business model transition are flowing through the financial statements. Given the company's recent success and my desire to better understand Avid's journey, I thought it would be a great time to catch up with Jeff and discuss what moving from perpetual licenses to a subscription software business really looks like internally, how the company is approaching a world where people can create great content on their iPhones, whether or not having activist shareholders involved in the company can be helpful, and how to balance the different cultures within engineering and sales teams. Before we begin, just a few disclosures to note. First, Cove Street is a former Avid shareholder and was a 13D filer for a period of time. And most importantly, all of the music on this podcast was created and composed by our founder, Jeff Rosica. And without any further ado, here's my conversation with Avid Technology CEO, Jeff Rosica. As always, we will start this podcast at a pivotal moment in the company's history. In this case, the pivotal moment in Avid's history happens to coincide with a big moment in your career. So let's go back to February 2018. At that point, you'd already worked in the broadcast and media industry for 30 years. You'd been at Avid for about 5 years and were the company's chief sales officer. So you get a phone call from the board saying your predecessor was abruptly leaving. To the best of your recollection, what were you thinking at that time?
That's a good question, Benjamin. Obviously, after I got past the first kind of shock that phone call had come in to me, is I really just quickly got to thinking about where to take the company. When I first got the phone call, it was actually a phone call about stepping in on an interim basis, and so I guess my first thoughts in that first day was really how to really make sure I can get the company through kind of the shock and the surprise of what was going to be announced. And really, at that point, I was thinking about obviously our employees and our team members, our customers, our partners, our investors, looking at all the stakeholders to make sure I could think through kind of what needed to be done and action. So I think, to be honest, that first few days was really about that. Now, as the discussions went on and I had a more serious discussion with the board then subsequently later on, before we went public, said, look, we'd like to announce you as the CEO. And so I would say that there was just a very short few days there, 3 or 4 days that were probably felt like weeks, and a lot was accomplished in those days, which you normally would accomplish in weeks. But I just quickly turned to, once we got through the interim planning and kind of that first planning, it really was about, I think, advantage I had is that knowing the industry, but also knowing Avid as much as I had known it from being here for basically, I think at that point I was here 5 years, 4.5 years, was I knew what worked, I knew what didn't work, and it was just quickly, figuring out the plans on how to take the company forward and get it to a much more successful place than it had been.
And I'd love to hear a little bit about communications at that time, right? Like there's a lot of stakeholders. It's kind of a shocking moment. How, and maybe in retrospect, how do you feel like you did communicate? So what was the strategy and how do you feel like you did communicate that when it happened?
Well, I think obviously there was a lot of work put into the communication itself and the strategy, what we wanted to say and when we should say it and to who. And so obviously I don't want to take away from all the work that a lot of people did in our organization to get, the communication messaging plans worked out. But for me, it's just knowing who I am. It was just be transparent, be honest, be forthright with what was going on. And as much as we could, obviously, you can only tell certain audiences certain things. It was really just coming forth with the information that I think people needed to hear. I thought of myself, if I was an employer, if I was a customer, if I was an investor, I already was an investor, I owned shares at that point, what would I want to hear? What would I need to hear from the company? So it's really just thinking through all those things and then just being me and come out and be clear and concise and transparent and again, forthright with everything.
I really like the idea of being authentic, being yourself, and then putting yourselves in the shoes of the people who would be hearing the information. That I think that kind of empathy is really important for a CEO. And so getting to that is when you got the news that you were going to be interim and then CEO, had that, you were chief sales officer, which is a senior level position, but had you ever thought about being a public company CEO? Was that in your roadmap? Was that in your plan? It's like, I could just see, kind of being a little bit of a surprise and a shock. So how were you thinking about it, or how would you previously thought about being a CEO?
Yeah, it's a good question. I wouldn't say that I necessarily sat back and said, gee, I want to be a public company CEO. It was more about my career trajectory and what I had built up from expertise. Even though I was chief commercial officer of the company, I was actually running both sales and marketing for the company. So I was taking on all the responsibility from brand and product positioning and messaging all the way through, obviously, marketing execution and sales, et cetera. But I also was, when I first came to Avid, I was in charge of all field operations. So I was actually an operations person taking care of all the customer-facing field operations of the company when I first arrived. So, and you look back at my career, I spent a lot of years in M&A. So I've spent a lot of years, developing my chops financially and developing my chops operationally. But I do come from a marketing and sales background for most of my career, but I was general manager of other pretty significant companies beforehand, though not necessarily the top seat of a public company, but I was in public companies in very senior general management and executive roles. So I built a lot of experience over time. I knew I wanted to be the head of a company. I wasn't necessarily at that point in 2018 saying, boy, next step, got to be a public company CEO. That probably happened a little bit faster than I would have expected, at least if you asked me that the day before the phone call came. But I was ready. I think the board probably saw that too, because they knew me from my previous roles and knew from their perspective that I was ready.
Got it. That makes sense. And so this is a company that had been through some trials and tribulations. There'd been a messy accounting restatement that, I think that's when Cove Street became a shareholder, right after the restatement. And there's been some management turnover. I'm interested how you would describe the culture, when you stepped into the CEO role, and maybe talk a little bit about how it's evolved, since you've been there for
yeah, I think, to think about it, I think a culture, I was pretty honest and open when I took the role. The situation wasn't great. I would say that I wasn't a big fan of the culture. Even though I was in the organization in a senior role, I was at the time pretty unhappy with the way we were organizing and the way we were, managing our culture and the environment of our company. So I would say it was in a pretty bad position. If you look at external metrics like Glassdoor or other things that are out there, obviously it was, I would say, dismal metrics for the company. For me, I think that was there's a lot of things I had to jump on, but culture was an important one, because if you don't have the people, we're not going to get anywhere, right? It's, a company is a collection of a lot of things, but if you don't have the people, you've got zero. And so it really was making sure that I got the organization on a better plane quickly from a cultural standpoint. And we had to make a lot of changes very fast to get that culture and to get the environment to where it needed to be. But I think it's crucial. It was a crucial part of getting the company on the right footing in the early days.
Well, this is a people business in a lot of ways, right? You have engineers and you have salespeople. There's a lot. It's a very people heavy business.
Yeah.
So let's dive a little bit into the business.
Mm-hmm.
So Avid, as long as I follow this company, has been known as an industry leader in the audio and video software world. But it's really, I think, when it's really, at least in my understanding, historically has been really focused on the professional users. So in a new world where anyone can take videos on their iPhone and edit them using free software, how has Avid tried to pivot to cater to what's called the prosumer, or maybe even amateur users?
It's a good question. We look. The way I would talk about Avid is that, look, we're not trying to be the top brand in prosumer or consumer space. And what reason I say that is that we're not necessarily looking for the hobbyist or the occasional kind of music creator or someone who wants to, as I always joke and say, cat videos on YouTube. And YouTube's gone a lot further than cat videos originally. But we're really about serious media creators. Now, that can be someone who's aspiring. That can be someone who's just starting out. That can be someone who is, making music from their basement or their garage. But it's people who are serious about their craft, serious about, wanting to make music or making a video or tomorrow's feature film. And so we are focused on serious media creators, whether those are individuals or they're companies that are in the business of making media. But it's not just your typical Disneys or Netflix or people like that. This is even corporations and government institutions, and it's anybody who's or individuals who are making music at home. It really is for us. We focus on people where this is a serious craft that they're trying to pursue. Again, whether it's for personal reasons or for business reasons. And so, if you ask a question about how do we evolve, I think what's really evolving is how people do that. Even though, yes, it's the great thing about communications tools is that they really are available to anybody. I mean, if you have an iPhone and you've downloaded the free editing software on the iPhone you can get from Apple, you've got, with that camera that's on that phone and some of the tools, you can make amazing videos and shoot amazing things. And with not very much more, you can be making music off of just simply an iPhone or a iPad or Android device, whatever. But I think that what really has changed is how people do that. I think what this democratization or this kind of making it almost ubiquitous, anybody can do it, is it's also changed the way people do make music or the way they make videos or the way they make television or film content. There's been a lot of change the way next-gen creators create their content. And so for us, the way we adapt is making sure our tools evolve and that the way that we evolve our company, the way people want to create content. That doesn't mean that, again, we're trying to be a consumer company. That's not our space. That's not our expertise. It really is about helping create professional tools for serious media creators.
And getting to that, just one more question about that is, I think there's a long history of companies, especially in technology, that have been kind of the high-end solution, and there have been some startups and ankle biters at the beginning that if you just let them get bigger and bigger, they creep up, and all of a sudden, you have a real competitor. How do you think about that? I mean, how do you think about what's like almost like the innovator's dilemma, and do you try to self-cannibalize a little bit? Do you not try to do that? I mean, it's I don't know if there's a perfect answer, but I'd love to hear how you guys are thinking about it.
Yeah, there's no perfect answer, but how I think about it and how we think about it is, don't let the innovator's dilemma set in. Because it can and it will, and I've seen it happen even inside of Avid. You've got to wake up. I mean, people ask me what keeps me up at night. Well, competitors are what keeps me up at night, not big competitors. I don't worry about Adobe every day. I worry about those little, as you call them, ankle biters, the people who are getting innovative and they've got a small team innovating. You have to have a kind of a fear of that, and you've got to wake up every day, and everybody in your organization has to wake up every day fearing what's next or who's going to come next or what customer requirements are going to change. I mean, the requirements too around our customers have changed drastically in the last few years, and they've really accelerated during the pandemic. So making sure that you're listening to your customer base and making sure that you're keeping a close eye on competition and innovate. And I think you said it, you have to be willing to cannibalize your own. It's not that you want to throw it out the door, but if you have a strong revenue stream that's on let's say, more of a legacy product, like we have had those for years, you've got to be willing to innovate those. You've got to be willing to take a hit on the revenue line of a product that's been here a long time to build for the future. And now you got to do that carefully. You got to do it with intelligence and with timing. But I don't think you should be afraid of going after, as I say, cannibalize your own young or create new young things that are going to replace the older things.
And now a quick word about our sponsor. Before we started using the Tegas platform in 2017, CoStreet rarely used expert networks to find high-value sources to help us better understand the companies we follow. The competitors' offerings were expensive and limited. Tegas changed that dynamic through their innovative business model, allowing firms like ours with a more limited research budget to conduct expert calls at a fraction of the price of others. Tegas then records, transcribes, anonymizes, and posts a transcript to their platform for subscribers to learn from. Every new Tegas customer makes the platform stronger through deeper and richer transcripts, and I've personally seen the growth over the past 4 years. The Tegas network of experts and platform of previous calls has made the service an indispensable part of our investment process. In fact, we now use the word Tegas as a verb. If you haven't tried Tegas before, I highly recommend going to tegas.co for a free trial and to start Tegasing your research. So you talk about your customers' needs changing. I think it's a good segue to my question about, the company, a little more on the company's culture. So, we followed this company for a number of years, and I think especially before you became CEO, it always struck us that the engineers called the shots. So how do you balance the desires of those engineers who want to solve every potential customer need that could ever come up with, and they want to build basically an aircraft carrier, with the reality that maybe the salespeople and your finance team really only want the engineers to build a tugboat, something that does the job but isn't overwhelming and too expensive? How have you found a way to balance that?
It's hard, but I think you have to. I think a couple things for me is that you've got to. First of all, the engineering and the innovators are important. You're never going to innovate and create new things. Sometimes it is about don't build an aircraft carrier when a tugboat or maybe a frigate or a different class of ship will do. You always have to be challenging people for that. And so I think that that comes from making sure that you put equal weight or equal parts on not just the views of your innovators and your engineering, but what do the customers think? What does the market think? And what's the opportunity? You have to always make sure that I think for me, I make sure everybody's nose is always pointed on the opportunity. Even if it's something very innovative, very new, you got to be solving something, right? You can't, innovation for innovation's sake is not important. Innovation that's going to solve a problem for a customer or going to enable an opportunity for a customer, that's what's important. And if you can make that connection right, if you can make the best connections that are out there, you're going to get rewarded from your customers, from all your stakeholders, including your investors. So I think it's important that you keep that in line. And one of the ways we've done that is I've implemented much more business planning, much more strict ways that you look at, where are we going to spend R&D dollar here, an R&D dollar there, an R&D dollar over there. The other thing, though, is that you've got to create some healthy tension. You need the marketing people and the sales people and the product people and the technology people there to be not a tension that creates a problem, but healthy tension that you want voices at the table to discuss and potentially disagree so that you can get to a better place in the end. And I think sometimes in the planning process, especially in how you fund innovation and R&D, that's important. That's not to say you shouldn't. Every company that's in tech should carve off a certain amount of dollars for pure innovation, for pure, idea generation kinds of things.
It was really interesting for me to hear you say that your customers' needs have changed and that was accelerated during the pandemic. I would love to hear a little more about that and what you're doing to evolve to serve those needs even better.
It's a good question. A lot of people before the pandemic came, you have technologies like cloud, right? Cloud enables SaaS business models and where you don't have to buy the hardware and you're basically renting the hardware and renting the software. And that's been there a long time in a lot of industries. But for us in our industry, that was there and that was starting to really mature. But I think what we saw is that before the pandemic, people cared about, how to, more and more we're moving to more of a gig economy where you've got really kind of the gig workers contributing more and more. They've always been a part of our industry, but you saw it really even grow in their role in the industry. So the role of freelancers was important, and that's been growing. But then the view of, well, it's not just freelancers. I don't want to necessarily work with a person in Los Angeles or in New York or in London, wherever I am. I'm in London. I want to work with somebody in South Africa, or I want to work with somebody in Singapore. How do you do that? Or maybe I'm in London, but they're in Cambridge. I don't want them necessarily to have to live in London. people were looking at that issue, I think, in general, and how to be more flexible and work more remotely and more hybrid. I think what the pandemic did is it made people who were maybe apprehensive or maybe a little concerned and risk averse, not really pushing on that possibility too hard. What the pandemic did, literally with almost a light switch, is everybody had to be working from home within days, hours, days, weeks. And so it made people try it. It maybe, and try it to degrees they weren't comfortable trying it before. And I think what people realized is it worked. We got it. We got that. We still made that song. We still got that content, on Netflix, on the subscriber channel. We got it on the air. So I think that it taught people some lessons about, maybe it taught them lessons, but allowed them to try new things quickly. And they got comfortable, I think, a lot less faster than if they would have done it, on their own pace. And so so working remotely, working what we call work from anywhere. I want people to work from anywhere, work with anyone, and work on any content. And I want it to deploy it any way I'd like, whether it's on-prem, in the cloud, hybrid, whatever. I think that is now a permanent fixture to our industry for sure.
And you mentioned in there the idea of having a subscription business.
Yeah.
And I mean, I think the acronym SaaS, or software as a service, is now so ubiquitous that even other industries are starting to steal that concept. But our sense is that a lot of investors underestimate the heavy lifting that goes into transforming a company from one that sells perpetual software licenses to one that generates recurring subscription revenue. It's not like you just turn a switch. So I'd love to hear you talk a little bit about that journey and how, both your sales and engineering teams have had to adapt as you've gone along the SaaS journey.
It's a big journey. I'd say the good news is that Avid is well into the journey now, but we're still in the early days of the journey ourselves. It's been a very successful part of our business. It has helped us transform the financial stability of the company and the trajectory of the company financially. But it's a big piece of work. And again, it's a piece of work that we're only, I'd say we're probably a quarter of the way in. We've got a long way to go and a lot of opportunity for our company going forward. But it's a transformation at all levels. It's a transformation of your tech stack. It's a transformation of your business models. It's a transformation of your go-to-market. It's a transformation of your financial profile because there's a famous J curve or different terms for it. You have to go through a period of change when you're going from an upfront model to a on-demand model or a pay-as-you-go model. And you've got to get customers through the journey and their perspective on how they want to buy things and deploy things. You got to get investors through the journey because the financial journey is going to be different than maybe they expected looking backwards. But it's a valuable journey. It's something that in the end is a win-win for everybody. We found that it becomes a win for our customers because they get to more flexibility in how they buy and how they deploy and what commercial models that they utilize. It's a win for the company, obviously, because it's a recurring model. It's a more stable recurring model that's more profitable for the company. And it's obviously a big win for the investors because as the company gets more towards the recurring revenue and less on the perpetual or the one-time kind of purchase model, it's a real benefit to the company's financials and again, and obviously to the company's valuation, how the market perceives the value of the company in that regard.
One thing you mentioned in the answer to a prior question was, when I was talking about ankle biters, you were talking about being concerned about the smaller competitors. Mm-hmm. And so one thing that we haven't really seen from Avid is in your tenure is acquisitions. Was that, was that an outcome of the balance sheet you inherited, or was there a specific strategy that said, we really need to focus on internal R&D. We need to focus on our SaaS transition rather than on acquisitions. Maybe talk a little bit about that.
I can. And because I spent a lot of years in M&A, I think people expected me to be on a buying spree the moment I took over as CEO. No, look, I think that acquisitions are important of any tech company's growth journey and as you're evolving and developing your business. When I took over as CEO, there was, the way I would put it is that we had to clean up our own house before we started looking at, acquiring other houses and bringing them into the fold of the neighborhood. It really was about getting the fundamentals right for this company. It was about, I really saw now the pandemic obviously got in the way here and we had to navigate our way through a pandemic. But at that time, if you asked me in 2018, I would have said I got to spend at least a couple years focused on the culture, and no particular order, but the culture, the organization, the business model, the financials of the company, the product roadmap, the capital structure. I mean, there was just a lot to get right about this company, and making sure that we were really building a strong, stable, financially profitable, cash generating company that could fund its way there. That wasn't just about, any company can find a way to take on more debt. For us, it was about getting the capital structure cleaned up and getting things in a much stronger place. If you look at our own company from where we were and the debt structure we had when I took over as CEO to where we are today, it's night and day from that standpoint. Even our financials, I think we were break even as a cash flow standpoint. I think maybe we generated $1 million cash flow for the first time in many years that I was at Avid before taking over as CEO. Now we're, on a great trajectory of generating positive cash flow ever since then. And you notice we've been generating cash flow every year and more, both as an absolute number, but also as a percent of the EBITDA. And so for me, it was really, and then the pandemic came, and it obviously got us focused on getting the company through the pandemic, and all that's gone well. So I think first was getting a very strong company that we could get in a very good place. Then I think acquisitions can be, and like when I've said on our investor day recently, will be a part of the mix. We're going to always continue to invest R&D internally in the things that we think we can innovate around, that we can do best. But there are areas where, technology acquisitions, and I'm not a big believer in big transformative M&A, but definitely technology acquisitions, tuck-ins of companies smaller than Avid, that they bring the right technology or the right go-to-market or all the above, that it can help accelerate our roadmap or fill gaps that we think we have as a company that align to our strategy. So look, we'll look at everything, but we'll always do things with an eye towards how we're creating long-term value creation. That's most important.
And I think, the market has started to appreciate, the cash flow profile change of this company and the things that you've done to fix the balance sheet. And so, when the stock traded at $4, you didn't really have a currency that you could use in M&A. I would argue now that you have more of a currency. How would you think about, future deals in terms of using a currency versus cash? Because this would be the first acquisition, and as CEO, so I'm interested in what philosophically, in terms of your own North Star, how would you think about using the stock as a currency?
Yeah, I think, I don't know if I'd say there's a single North Star. I think there's a single principle in play, which is, capital allocation. What do we do with our capital? It's going to go towards the things that we think are going to build the right long-term shareholder profile, and that we're going to create value for our shareholders. I think Ken, our CFO, and I have probably consistently said the same thing. If you look over the next few years and how we use the cash we're generating, it's going to be a mix. Obviously, we're going to keep an eye on our debt structure, but at today's interest rates and our current debt structure company, we've got a very, very cost-effective debt structure with our current lending organization or our lending structure. I think that we're going to look at, obviously, with all eyes on share repurchase, refinance, or debt reduction and M&A, and we'll make combinations of, I'm sure, moves over time that are in the best interest of our shareholders. But all I'm keeping my eye on is where we're taking and I say long term, it's medium to long term. Where we're taking medium to long term the company, and what's going to best drive that shareholder value. Look, in the end, my view is pretty simple. If you really do the right things to make your customers happy and want them to spend money with you, and if you keep an eye on driving value of your shareholders, everything takes care of itself beyond that. And you got to wake up every day. I also, of course, worry about our culture and our team, but for me, it's equal part looking at making sure that how are we driving value for our shareholders, whose money it is that we're given to manage our business. It's how we're going to drive value for our customers, so that they're going to want to keep spending more and more with us, and or more customers that don't buy from us today are going to want to buy from us in the future, and how we really have a motivated, energized, and focused team. And that's probably the three most important parts of my job.
On the topic of shareholders, Avid has had the distinct pleasure of having multiple activist shareholders over a period of time. In fact, for full disclosure, for a while, Cove Street was a 13D filer on Avid. So my guess is, especially as a new CEO, this is not an ideal situation. But I'm interested if especially thinking back in hindsight, if you could point to some areas where input from certain shareholders has been helpful over time.
It's a good question. Look, it's funny that, I don't think we've necessarily, at least not when I've been in Avid, we've never had to deal with what I'd say is an activist that was in a real negative stance. Like, I think even your organization, I've known Jeff a long time, since I've been at Avid. And, even though activists like Cove Street, or now we have Impactive in with that team, obviously they're here to make clear what the objectives are they want to achieve. But I think that, look, I think the input that when I became CEO, one of the first people I met with was the Cove Street team, and talked about their input from a shareholder perspective. I think shareholders give a lot of great value, and again, sometimes there's often very tough discussions, but I think that they bring a lot of perspectives, not only of themselves and what they're looking at, but they bring a collective view of the market. And so I think I always engage heavily, not just passively with shareholders, but actively with shareholders, and that includes, now we have what's, I guess, considered actively an activist firm with Impactive. But as an example, they're on our board. Christian Asmar is on our board, and they've always positioned themselves as constructivists. That's one of the things they said to us when they first came on, and that's exactly how I see them and how they work with us. They don't hold anything back. They're very open. They're very upfront. They're very clear about the things that they think they can add value on, but also opinions that they have about the business. And that's proven to be very valuable to us, from a company strategy and financial strategy to an investor strategy. So I think, look, I listen carefully to everybody. I don't want to just hear from people that love us and love me and love what we're doing. I want to hear from people that have different perspectives and new views and new ideas. It's the only way we're going to keep improving. If there's nothing to fix or nothing to change, I'm not sure why I'm in the job. My job is to fix things and keep improving things to get on the right trajectory.
Well, I think the fact that you were willing to appear on the podcast shows that, we have, Cove Street and Avid have maintained a very constructive and productive relationship over the years. Absolutely. You also, you mentioned the board. I mean, you have a very interesting board. Viacom CBS CEO Bob Bakish is on the board and has been on for years. I'm interested, how you interface with the board, and what someone like Bob, being on your board can bring to a company like Avid.
Yeah, it's a good question. It's not just Bob. I think if you look at the makeup of our entire board, you've got different types and different profiles of our board. But let me first go back to the middle of your question, which is, how do I see the board as valuable to the company and to the management? I mean, first and foremost, the board has a responsibility of governance and shareholder representation. So that obviously is important, and they've got to take an independent stance and role with that. But I think what's great about, our board, and the way I like to work with a board, is they're also people who have extreme experience and networks and information and ideas that are valuable. And I think that I've always treated our board, and they treat me as collaborators in that regard. Again, they first and foremost have to do their governance and their shareholder representation, but the goal should be the same. We should be trying to drive value for the company. And so being able to leverage them in the way that I can and I do is quite good. So we spend a lot of time with our board, not just in obviously formal board meetings, but they volunteer a lot to give advice, counsel, information, etc. And so people like Bob or John Wallace, who give us really the operator's view, and these are both people who've been very experienced in the media industry, and they allow me to really ask interesting, tough questions around how media companies think and how we should be thinking, and also just as very senior managers, they've got a lot of experience in what worked, what didn't work, and what succeeded and what failed. So I think getting their perspective is important. We also have a lot of strong industry experience besides Bob and John. We've also got Elizabeth Daly, she's been on the board quite a while too, but she's the dean of the USC Film School. And having her perspective on Hollywood and education and et cetera. Paula, who is someone that is really more of a governance background. She's a lawyer by trade, but she's also a musician. And now in this stage in her life, she's making music. And it's interesting to have that perspective sitting on the board. And that's a value. And then we've got very strong financial. I talked about Christian Asmar, but also Dan Silvers or our chairman of the board, Peter Wesley, or more operator financial people like Nancy Hawthorne. They bring a financial perspective, and there's real value in that as we've been looking at the capital, as Ken, both not just myself, but Ken and Whit, who's in our corporate development and IR, as we've been looking at capital structure and looking at just how we're taking the company forward, that counsel and that feedback and that information and networks that they have has been very beneficial to the company. So I hope the board, if you ask them, would say that, yes, the management team and Jeff specifically is very open and very collaborative with the board, because I think there's such great expertise there that I would be crazy not to be tapping that for the benefit of the company.
You mentioned in that response that having Bob on the board gives you a sense of what the big media companies are thinking. I mean, those guys typically are your largest customers. And when you have customers that are that big, I think they can be very demanding and push hard on things like pricing and asking you to, change orders that they don't pay for and stuff like that. So as an organization, especially as one as established as Avid, how do you make sure not to jump when someone like NBC or Viacom says jump, and make sure that you're getting paid fairly for your products and services and get a fair margin for what you're offering?
Well, I think, it's definitely a journey this company's been on. I think if you go back many, many years, you could easily criticize the company because maybe we were doing too much for too few and not looking at the wider market. But I think there's a couple of differences. One is that we've gotten you got to listen carefully to these customers. And I think one of the things if you listen carefully and you work collaboratively, you don't have to get forced in a corner to only do it their way. I think you just have to kind of be willing to have those discussions and have a longer discussion with them to get to a better place. That said, there are times when you're asked to do very custom things, and we're now a company that says no. If it doesn't meet the needs of the wider market or we can't align it to the needs of the wider market, then we're not really interested in doing it as a company. Third thing I would say, though, is that I think the difference today is that none of those companies even though they're very important and we think of them as very critical customers for us, none of them represent anywhere near 2% or very few represent even close to 2% of the company's overall revenue. And so we're not quite in the same position we were before. I think our market today is very evenly spread between the big enterprises, kind of the small and medium-sized businesses, and the individual creative professionals. So I think we're better evenly footed than we probably were if you go back several years.
You talk about that customer diversification. I remember your predecessor doing a big deal in China. What does international mean for you guys now? Is that, is that a big focus? As you talked about fixing the company, was it more of a domestic focus, and now you can more focus on international, or how are you looking at that as well?
It's a good question. No, it was not a domestic focus. It was a global focus. I mean, when we looked at getting the company profitable, there was a lot I focused on. One is, looking at the organization, bringing the right people in the right leadership roles. They're willing to make the right decisions. It's too easy for people to get emotional about their decisions and not just get very practical and financial driven in their decisions. Really, for me, you've got to be, financial and market driven. If you're not equally looking at both the financial reasons you're doing something and the market reasons you're doing something, if you lose sight of those, you're losing sight of the business. But I think getting people very focused, getting the right organization in, the right leadership in, getting the right culture in, getting a lot of rigor around the business planning and target setting and how you drive the organization. But it also was looking at everything with an unemotional view, whether it was geographic markets, whether it was product areas, it didn't matter. We looked at everything to say, where are we making money? Where are we not? And how can we change that profile to make sure we are making money in everything that we're in? And so it really was taking a very unemotional, even though I'm someone who's been in the company a while and I'm someone that has been in the industry a long time, that doesn't mean I love everything about the industry or love everything about Avid. It was really, making sure that we looked at things very unemotionally and with an eye on practicality on what the future was. And also, we got rid of things that were profitable, but were not going to carry us forward. Things that just were not going to grow and not going to take us to where we want to go. So it really was making sure we got focused as a company.
Got it. That makes sense. So, it's interesting. I think people think of, if you're a CEO, problems are negative things are harder to deal with, but sometimes success can be hard to deal with. So
Mhm.
Avid stock has had a remarkable run over the last 12 months, rising from under $10 to the high 20s now. As I said, sometimes success can be just as hard as dealing with failures. How does your management team and the board think about dealing with rising expectations from your various stakeholders? How do you communicate with people about how to handle that?
It's a good question, but first of all, I'd say that you would assume that the markets and other views have a higher aspiration than we do. First of all, we have very high aspirations of ourselves and where we want to take the business. And so probably nobody's got a higher aspiration than myself as to where we need to take the company, where we can take the company. So it's more keeping myself in check, keeping myself an eye on myself, is to not get out over my skis and to make sure that we're, progressing in the right steps to get to where we want to go. But I think you're right, is that you got to be careful. That what I would say is don't let success get to your head. I'm happy to see, where we've progressed over the last year, but you can't look at the short-term metrics. You've got to look at, where's the long-term gain? Where are we getting to? What's the trajectory we're on, and how are we doing against that plan? So, well, it's great to see the market react, and that's good to see. We're not even near where I want to take the company and where I think we can take this company.
So how do you think about incentivizing people to achieve those stretch goals? What is it? Do you have to change your compensation structure? Are you happy with it? Or is it more just about like setting putting some kind of stretch goal in people's compensation? How have you thought about doing that?
Yeah, well, we do. Everything always has a stretch, whether they're sales quotas or there are, targets for our executive team. Everything has a built-in stretch. I believe in a couple of basic things. Number one is wherever you can, get everyone aligned to the same thing so that nobody's misaligned to what we are. So interesting, I'll tell you that everybody in the company who is a full-time employee that is eligible for a corporate bonus, everybody has some, whether it's 5 or 10% of their pay or 50% of their pay, they are on a corporate bonus. I'll put salespeople aside for a moment, but other than the salespeople, everybody else is on a corporate bonus, and everyone's focused on the same things. Everyone's focused around strategic revenue, everyone's focused around EBITDA, and everyone's focused on free cash flow. And so whether you are my assistant or you're the CEO and everybody in between, every one of us gets clearly what we're trying to do and what metrics we're being judged on. And those are the metrics, if they sound familiar, that our investors are going to judge us on, at least from a company performance standpoint. Obviously, the equity component for a lot of people is important too, to make sure they're aligned to how we drive shareholder value. But it's also making sure that we keep it moving, that we keep evolving those metrics, that we keep obviously raising the bar on ourselves as to where we want to go. But also over time, we'll evolve those metrics to make sure that we're focused on the right things as as the company's journey unfolds. How do we keep evolving those metrics and what we focus people on? But making sure everybody wakes up as much as you can. Again, I put the salespeople aside for a moment. I'll talk about that next. But you want the company collectively looking at, where we're taking the organization. Even sales management has an element of their bonus that's on the corporate bonus. And so they're all tied to making sure we're delivering on this. Now, on the sales side, people who are, quota-based, that's an evolving thing almost every year. As you said earlier, you asked me the question around moving to a SaaS business or a subscriber business. That journey does require you to continue to change and evolve how you compensate people. And so, short-term kind of, get a deal in the door and win it, that compensation is less now than if you sign a multi-year long-term agreement with a subscription base to it and everything in between. And we even start de-emphasizing commission rates on certain products and doubling down commission rates on others. So I think you have to I think that the target setting and compensation have to be well aligned to where you're trying to take the company. And you always got to tweak it every year and move it on the path that you're on to where you need to go. It's important.
You talk about getting all the employees aligned. And when I hear that, I think about Avid Connect, which is the event where you gather all the Avid employees and users together, and you often make announcements about new products and services. But given the world we live in today and how much we've all been impacted by COVID, how are you thinking about the future of Avid Connect and then even large industries trade shows like NAB? Are those still a core part of the Avid sales and marketing strategy?
That's a good question. I've been asked that a lot, especially in the industry. I'm asked that, and I'm one of the people that took a pretty hard stance that even in 2021, we were not going to go to major trade shows. In fact, I said it was premature. This is months ago. I said it's premature for us to be talking about gathering tens of thousands of people together in a hall and jamming them together and thinking that everything's going to be okay and it doesn't become a super spreader event. Well, I guess, my view of that a few months ago hasn't changed, both for me, but probably for a lot of people, because, as you see, the situation with the pandemic isn't necessarily a straight line to recovery. But I think that what happened during COVID, I remember I talked earlier about how our customers have learned a lot around how they're going to do business. We've learned a lot as an industry about how we're going to do business. If I look at everything from how salespeople and even management crisscross the world getting deals done, or how we went to these big trade shows, which I know you guys have been to from Cove Street, they were outsized part of the investment we made in sales and marketing costs. Now, I'm not going to say that they're going to become zero, but I think the mix is going to change a lot, because we learned a couple of important things during COVID. One is that content marketing and digital marketing and virtual type of events can be very effective, and they're very efficient, and they're very cost effective. And so I think that forevermore, I would say, and I say this as one of the CEOs of one of the bigger brands in our industry, this can permanently change our industry. I don't believe big trade shows, even things like Avid Connect, are ever going to be the same. We've learned how to, and I think it's a good thing, because I think that even Avid Connect, you guys have been to our event. This is our big annual customer gathering. And that's been very successful, but it's still only 1,500 people of very select customers. And if we really want to get to a wider market, we need to get to 10,000 customers, or 20,000, or 100,000 people, or 1 million people, depending on the market that we're in. How do we get to them more efficiently? Because they can't all buy tickets and fly to Las Vegas and spend 5 days of their life in Las Vegas. And so I think we've learned a lot. We've worked with the Avid Connect event is actually an event we do together with the Avid Customer Association, which is an independent organization that we sponsor and that we help administer. But it's an independent group of customers that have their own board and their own committees. We work tightly with that organization. I think over the course of COVID, we've learned how to do more virtual events, how to do more digital events with them, and how to engage in our community wider than just this big, glorious event once a year in Las Vegas. Now, again, I think what we're going to see is, I'm not saying anything out of school. I think our ACA board Avid Customer Association board has said that they'd rather not do one big event a year. They'd rather do, when we do face-to-face events, they'd rather do smaller, more intimate gatherings around the world. In London, in Los Angeles, in Singapore, name your big city around the world. They'd rather have more intimate, which are, by the way, lower cost and more efficient events. But you can get to way more people around the world face to face. But we're also doing a lot more virtual, a lot more digital, and that's taught us to do things differently. And so I think we'll never go back to the pendulum will swing a little bit, but I think we'll never go back anywhere near the way it was before.
That's a really interesting perspective. Thank you for sharing that. I'm interested, you were kind of thrust into the CEO position, and my guess is you had to learn a lot about things on the fly, maybe some technology stuff that you might have not have been involved in. I'd love to hear about any mistakes that you made early on and what you learned from them. Anything that you would be willing to share, with humility about, your learning process.
I make mistakes every day of my life as a CEO. So hopefully most of them are very small ones. But look, you've got to fail, and you got to fail fast. I mean, any fast moving technology company will say that. I think that, I wouldn't necessarily put my hand on one thing. I think it's just lessons learned along the way. I think you learn small and sometimes big lessons that you have to adjust your approach, or adjust your thinking, or adjust your decision making as both a CEO, but also as a leadership team. And so I think that I'd say the biggest thing I've learned, I've always been someone who felt like you can rip a Band-Aid and move faster. I've never felt like you can break anything. If it's a good, solid company with a good underpinning and a good foundation, you can change fast. It really won't blow up. It really will. It will take it. It will move on. I think the only thing I would say that I probably learned more of is I was right, and I could do it even faster. And I think there's things that I could have moved faster on, I could have changed faster. That even though I'm a believer that you can quote unquote rip the Band-Aid and move forward and change and fix things. I think that even I will regulate myself a little bit to be, am I going too fast? Am I ripping too much there? I think I've convinced myself through all of this, jumping into this role, changing the company as fast as and I say I'm the CEO. A large team of people have been changing this company over the past 3 years. But I think that I've learned as a CEO that we can change even faster, that we can attack more. Now, with some humility, I'd say the other thing I've learned is that you can't change everything at once. That my appetite for change sometimes is we can do a lot more than we can actually handle as an organization. And so it's probably understanding how much you can do when, or how to prioritize or face things. Because I'm someone too who can just say, let's change all that. And sometimes the organization that can weight down an organization if you change too much too fast. So it's interesting. You have to learn to regulate and more prioritize and face things, but also you got to be willing. I think what I've learned across my whole career is that you never look back, and I can't think of a time where I look back and say, oh, I shouldn't have made that change, or I shouldn't have gone forward. What you really kind of rethink is the things you didn't change, the things that you could have changed faster, or you could have, you knew something was wrong and you could have probably made a faster move in that regard. I regret, I'm not a person who regrets things, but if I had to say I regretted something, I always regret things I didn't do, not regret things I do. So it's always about me making sure to keep moving as fast and with as much focus as the organization can handle is maybe the way to say it.
And getting to that a little more specifically, I think you're in the technology industry, your customers' needs are changing. How do you center an organization around not just responding to what the customer needs right now, today, what they're demanding of you, and look 3 to 5 years out? Like, how do you incentivize people to look around the corner? Because it just seems like you have a hard enough job as it is day to day. Like, how do you get people to step away from that and look 3 to 5 years out?
It's a transition you have to go through. I think if you do it at the right time. I think, look, when I started as CEO, I felt like the whole organization was way too short-sighted. They were looking like almost in the quarter and that's it. So my first thing was to get people to look out a bit. And, I kind of think of it as trifocals. You've got close up and medium range and long range you have to look at. So over time, it was just getting people to open their aperture and keep an eye on all three. Because I think that if you're going to be most successful, you have to have a view on all three. You cannot just focus on the long term. You cannot ignore the short term. And quite conversely, you can't just fix the short term and not look at where you're going long term. And of course, everything in between. You've got to keep an eye on all of it. So it's just over time, I think it was just opening the aperture more and more to the organization to think short, medium, and long term in everything that we do.
Got it.
I think people want to look long term. I find that you find that the thing that I find troubling or challenging with people is you've got long term thinkers and you got short term thinkers. You really got to get people. You need everybody doing all. You need people to keep. I'm not talking about people who are transacting day to day, but I mean, as people are thinking about where to take the business, they always got to keep a sight on all three horizons, if I can call it that.
That sounds like if you could infuse that into the company and have it be lasting, that sounds like it'd be a great legacy. Mm-hmm. What, as you think about, I'm not trying to kick you out of the seat right now, but if I had to pin you down, like what, you inherited a company that, as you said, had cultural issues, had accounting issues, had management turnover. What would you like that lasting legacy to be if you look back, 10 years from now about what you left at Avid?
That's a good question. I mean, look, fundamentally, I want to leave something much better than I took it over. I mean, I think if fundamentally people can say, and no matter who the stakeholder is, whether talk about investor, right? Obviously, I want investors to look back and say, "Oh, I remember Rosica. Look at what he did, from where the company was and where it is today, and how valuable it is today, and the trajectory it's on today." I think, how I would want customers to think of it as, that what they see is a much better company that is hopefully doing much more for them and much more value to them. So they're they're voting in their dollars and what they're giving the company. And I would want the team members to think that, hey, look at where the company's at culturally and organizationally, who we are as an organization and a culture. I mean, I think, I just want to leave the company in a much stronger position than I inherited. And I think we're on the journey there. We're a good way into that, but we still have more work to do as a company.
Do you feel like the company has the bandwidth to do, I don't know, something different, right? Because again, we talked about fixing what was broken. That's including the balance sheet and the culture. That's helping a SaaS transition actually happen. That's getting the cash flow right. I mean, do you have initiatives to add, other things into the tool bag, that you could leverage your shareholder, through your sales force? I mean, and maybe this also getting into M&A, but do you feel like the company is now, in a position where enough things are fixed that you could really step on the gas on another initiative that's maybe outside of what the core is right now?
Yeah, absolutely. Look, I think our moves are going to be both in the core, adjacent to the core, and potentially, over to the side of what we're doing. I wouldn't say that we're going to go make automobiles or rocket ships next week, but look, what we do is we're an innovator, and we innovate around tools that are used for creating content, not just creating, but creating, managing, and distributing content. There's a lot of opportunity I see in the marketplace for our brand and for where our company can go. Some of this, if you look at our investor day, it'd be too much for me to talk about in this podcast, but we've publicized all the videos and materials from our investor day. In that, we hint a lot, and more than hint, some things we're very outright about. But we talk a lot about where we're taking the company, where we see the opportunity. Now, we didn't obviously divulge it all in investor day. We have competitors, and we need to obviously make sure that our competitors don't know exactly where we're going. But I'd say we have a lot of opportunity for the company, both in our wheelhouse and probably adjacent to the wheelhouse. But I don't think the company should be going to do something it doesn't know how to do. I think we'll stay in our lane, but I think our lane could be much wider than it is today.
Got it. That makes sense. And I think no conversation with a public CEO these days would be complete without mentioning the term ESG. I think you guys are pretty well covered on the governance side, both from a shareholder perspective and then like internal sense of what governance. But I'd love to know on the E and the S side, how is that changing your view of the world? How's it changing the way you hire? What is it changing from? How are you evolving as your stakeholders maybe have different views or evolving views of what the world should look like?
It's a good question. So I think it starts with me. I know I'll say it didn't start with me. Our board cares deeply about this subject, and many members of our board spend a lot of time with us talking about this. I think as a company, one of the things that we haven't done well is that there's a lot of things we're doing in the E, the S, and the G as a company, and we're probably not very good, have not been very good at making that really outwardly visible to our customers and our stakeholders, including our investors. You're going to see us doing a lot better job on that in the weeks and months ahead. Again, we got to pick our priorities and do things, in the proper way. But I think for us, environmental subjects and social subjects have been very, very important. They're very dear to my heart personally, not just as CEO, but also as a human being. And our industry cares deeply about it. I mean, we all talk about ESG from an investor standpoint, but our customer base, people in media, people who create content, they care a lot about the environment around social. And so it's an area that, around corporate social responsibility that we're focusing a lot on as a company. And you'll see us doing more and more. First of all, you'll see us making more visible what we are doing, but also you'll see us doing more and more as we look forward in the next 2 to 3 years as a company. I think if you're going to be if you're going to be a technology supplier in the corporate world today, this has to be a priority. As corporate citizens, we have a role, we have a responsibility to do our part. But I think when you look at where our industry is and what they expect out of us and what they expect, people they're going to buy from, people they're going to put their trust in, they expect certain things from a company like ours, from how we invest and how we, what we do as a company on these subjects, but also how we use our bully pulpit to help for good. And so if you watch our social, you see a bit of that from us, but you'll see more and more over time. But they're important. I think they're important again to investors. A lot of talk in the investor world about this, but it's crucially important to our customer and user base for sure.
Sticking briefly on the people side, as we wind down, I'm interested in what you've learned about hiring over your career and getting the right people on the bus, because I do think to some degree you inherited a situation where maybe not all the people on the bus were the right ones for the future.
Mhm.
Any lessons, for especially for either someone who's a founder or, just or anecdotes that you could provide investors about how they should evaluate CEOs in their hiring capacity?
Yeah, it's a good question. Look, hiring people and motivating people is a big part of a CEO's job. And so it's look, I think it's important that the way you're going to hire, I think the mistake people make often is that they hire people too close in their network. I mean, yeah, we've all got networks and we know people that are in our network that we reach out to, but you have to really go wide and you've got to be willing to go outside your network or you're going to end up with the same result. You're going to end up with the same, they're too close. And so one of the things I do is it's very important for us to reach really wide, that we source wide, that we go very wide. One, because you're going to get the best potential talent, you're going to get the best potential type of thinking that an employee can be. But also, D&I is an important subject for our company. If you don't source wide, if you only source in your network, and you're me, a middle-aged white guy, you're going to end up with a bunch of middle-aged white guys, and you're way more than you're going to end up with people of color or potentially women. Even though I do have a very strong network of women, but I'm just saying in general, you've got to reach outside your comfort zone. You got to reach outside your network and make sure you're sourcing very wide. I think that the more you do that, the better success you're going to have in the getting the type of talent. You also have to be willing to I think for me, I'm very loyal and very committed to our team, but it also is a two-way street. Is that you've got to be clear that not everyone's right for every job, and even someone who is right for a job one day may not be the right person for that job 2 years from now. And so you've got to make sure that you're always looking without emotion as to what the requirements of that role is and whether that person is or isn't right for that role. Doesn't mean they have to go out the door. Maybe it means they need to go do something else or take a different role that's more attuned or aligned to what they can really succeed. It's just important to make sure that, again, there's a lot of great people, but it's making sure you've got great people that are great at what they do and that they can, get the successful outcome you're looking for in a given role. And again, being as unemotional as you can to that is important.
I have to apologize because I'm going to jump to a question that I just have to ask, and it just struck my mind. So when I walk the floor of Avid Connect, of NAB, like after going to Avid Connect, I see 40 companies that look like they're doing the exact same thing, like very similar technologies, and and when I think about that, I was like, this industry is so ripe for consolidation because there's so much redundant R&D and there's so many redundant sales forces. Like the entire industry could become more profitable if it just shrunk a little. Has that happened at all? And is it likely to happen in anyone's lifetime, do you think?
I've stopped predicting that because it's funny, I've been saying that since I was a young man entering this business. I remember going to a trade show thinking, this industry is crazy. Why are there so many vendors? There's 1,500 vendors in an industry of this size. And I always used to, if you asked me this 20 years ago, I would have told you, yes, and this is it. We're on the cusp of a roll up where it's going to consolidate. And every time there's a consolidation, 20 new players come out of the woodwork and replace the person that we can consolidate. And every 1+1 of major players I've seen happen in the industry, they became 1.2 and somebody else came in and filled in the other 0.8. And so it's been interesting to watch it as an industry. I don't get it. Now there's been certain consolidations in certain parts of the industry because certain product segments or certain markets just couldn't handle more than 2 or 3 vendors. But generally our industry, I remember early in my career, I remember learning that there was about 1,500 vendors in NAB, and I thought that was shocking. And I may have heard that in like the 1990s. Here we are in 2020, and there's 1,700 vendors at NAB. It's just, I don't know, it's more vendors, not less vendors. And so it doesn't make sense. I can go on and on why I think that's the case. I think a lot of it has to do with innovation, the pace of innovation, the pace of change of our industry. But also it's a sexy industry. For some reason, people love to get into the media space. It's very attractive and it's got a lot of benefit from a brand and a perceived value standpoint. I mean, I grew up in the industry. I know this industry. I love this industry too. But I think some people maybe get in for a lot of wrong reasons. They don't get in for how to make money.
Thanks for that answer, because that is something I've just always wondered about this industry. So we're going to close. I mean, this has been great and really jumped around a lot of subjects and covered a lot. But I think this is my favorite question, and it's the one we always close with. So what do you think is the most misunderstood or underappreciated aspect of your business and company?
Well, I have a different answer today than I probably would say 3 years ago. I think today, the thing that, though it's gotten better, and I think perceptions are there, I think that if we really speak from an investor standpoint, I think that there's still too much, a lot of people have gotten it, but there's still too many people that think of Avid as what we used to be, this hardware company with a little bit of software. And, I think that when people get a close look at who the company is today and where we're going, first of all, where we've come from and where we are today and where we're going, I think people realize this really is the opportunity and the story of a growing subscription and SaaS software business. And that's where our future is. And that's where we're growing as an organization. And that's why we're becoming, as successful as we have been in the last year or two. I think those are important story here. Yes, we're going to have some element of hardware and some of the old business model, but that's becoming a smaller and smaller part of the business as the software subscription and SaaS business grows as a part of the company. And so I think people do, when I first meet people who maybe don't know who Avid is, or they heard of Avid a while ago and they haven't looked closely, I think they misunderstand who we are. They misperceive who we are today, and kind of what we're doing today.
Well, I will say, and this is a compliment to you, is that day where you were named CEO, we said, who in the world is Jeff Rosica, right? And it just goes to show, as an investor, that you never know, where someone's talents lies, whether they'll be a great CEO or not. And you should really take the time to get to know somebody and how they think, because, it's some of the best CEOs ever have come from places where you wouldn't expect. And so
I appreciate
it. So congratulations on everything you've created and continue to build at Avid. And thank you so much for appearing. This was a great conversation, and I'm really thrilled that we got to cover so much. Jeff,
I appreciate it. Thanks so much. Thanks for having me. And I look forward to listening to more of your. Well, I won't listen to my own, but listen to your other podcasts that are coming. So
great, Jeff. Thanks so much.
Thanks. See you. Bye.
That's it for our show today. We hope you enjoyed the conversation. We recognize that you have a lot of different podcast choices, and we appreciate you spending the time with us. We are continually working to make the show better, and we would love your feedback. The more candid and honest, the better. And if you have any suggestions for public company CEOs you would like to see on the podcast, please let us know. And of course, warm intros are always appreciated. Please feel free to email us at podcast@covestreetcapital.com with your comments or suggestions. Thanks again, and stay tuned for the next episode of Compounders, Anatomy of a Multibagger.